Hello, and thank you for joining us. I'm Emily Fish, your moderator for today's roundtable. We asked you, our audience, to submit questions for our panel to discuss today, and there was quite a mix of topics to address. So we've assembled some of the industry's leading accounting professionals to talk through those topics. Panelists, I see you are all here. We're waiting for Sarah and George to join us. There they are. Welcome, welcome. So we'll start with introductions so you can meet our esteemed panel, and I'll start us off. I'm Emily Fish, Product Accounting Manager here at LeaseQuery. Prior to joining LeaseQuery, I was the Senior Manager of Lease Accounting and Audit for Pier 1 Imports, where I implemented ASC 842 and new lease accounting software. So George, you want to introduce yourself next?
Hi, I'm George Ozzie. I'm the founder and CEO of LeaseQuery. Prior to LeaseQuery, I was at a company called Graphic Packaging, a Fortune 500 company based here in Atlanta. And prior to that, I was an auditor at Porter Kittlemore, currently Wipfli. Sarah?
Slaughter.
Hi, my name is Sarah Slaughter. I am with Baker Tilly, a senior manager. Been here for 18 years and emphasize on specializing in public sector, specifically in GASB.
Timothy?
Good afternoon, everybody. My name is Tim Tickle. I'm a vice president with RGP. We are a global consulting company. Been assisting companies and governments for the last couple of years in the GASB space, as well as in the ASC and IFRS space. Personally, I've completed about 120 lease engagements, helping clients and organizations prepare for the upcoming standards, including, I think I'm up to about 10 GASB engagements that I've completed. So I've been through it. The good news is that you will survive. I have the scar wounds to prove that, but there are a lot of things to discuss though. Thanks for having me.
And Sarah OSullivan.
Hi, I'm Sarah OSullivan. I'm a director of product here at LeaseQuery, and my background is in accounting, similar to George here next to me. Actually, I came from graphic packaging as well, where I did help run the project to implement ASC 842. So I have experience with that on the FASB side. And since coming here to LeaseQuery, I'm helping to support the accounting compliance of our tools, and I've had a special focus on GASB87, GASB96, and a lot of the government accounting that's coming up.
Well, thank you all so much for joining us today. And I know our audience is really interested in our answers. So before we get started, though, I need to remind our audience that each accounting scenario is different, and the advice given today is in no way meant to be a directive as to how to apply these accounting topics for your unique situation. You should consult with your auditor or accounting professional to address your individual needs. All right, panel, let's dive in. So George, let's start with an overview of GASB87. What are the main differences between legacy GASB and GASB87, and what is the adoption date?
Well, thank you very much. That's a very good question. Essentially, the adoption date is going to be for fiscal periods beginning after June 15th, 2021. So essentially, GASB establishments should have already adopted if your fiscal period begins after June 15th, 2021. As far as the differences between legacy GASB and GASB 87, essentially now all leases are going to be finance leases, right? Essentially all leases are going to be capitalized as finance leases. This is also a difference between FASB and GASB. Another thing that's going to change is your lease term, right? Now your lease term are going to include any periods any renewal periods, right? So you have to look at the maximum possible lease term. This is also a difference between GASB and FASB. When you transition, you actually have to restate your prior period financials, right? So you have to actually go back and restate your whatever periods you're presenting, you're going to have to restate that. And lessors also have to capitalize their receivables, right? This is something different than goes on today under GASB, and is also going to be a difference between 842.
Great, thank you. So that's a high level of GASB 87, and Timothy, we understand GASB 96 is similar in concept but different in application. Can you give a brief overview of GASB 96 and talk about
Yeah.
how entities can leverage their experience with 87 while applying 96. So, maybe for example, if a company has a software lease that has a hardware component, how would that be handled?
No, I think that's a great question, and I think as close as GASB 96 is to GASB 87, we should, as an organization, if you're thinking about starting a GASB 87 project, want to consolidate 96 into it. In theory, 96 comes after GASB 87, and it has to do with what they call small subscription-based IT agreements, or SPIDAs. And essentially, the accounting is essentially the same as GASB 87. They're requiring the organizations to capitalize these subscription agreements and to account for them over time. And so, I think the biggest challenge with GASB 96 is that as an organization, especially in governments, you'll find that the potential for these types of arrangements extend out further into the organization under GASB 96 than what you would traditionally find for just a lease agreement. So, any part of the organization that is going out and buying any specialized tools, IT agreements to access any web-based tools, those tools now are potentially applicable. So when you're looking at GASB 87, if you identify potential, web-based software agreements that are tied to any type of contracts, you should be getting to aggregate those and possibly conjoining the activities. So as you're going through the discovery of trying to find the GASB 87 leases, if you expand that to include, an analysis or a questionnaire or survey on the SPIDA side, you may be able to attack both discovery events at the same time. That being said, most organizations are challenged just with GASB 87. That being, and if that is just your sole focus, then focus on that. But those organizations that have some flexibility there and perhaps maybe looking to leverage the short amount of time that they have between the two standards, they may combine those two.
No, that's a great piece of advice. Kind of that whole touch it once concept, right?
Exactly. Yeah.
So Sarah Slaughter, identifying an entity's lease population came up several times in the questions that we received from our audience. And, understandably so, this task can seem really intimidating. What advice can you give to entities who just don't know where to start? What are some possible strategies to ensure that they have a complete lease population?
Sure. So I think the first thing is obviously set a point person that understands, GASB 87 and 97, so they can really speak intelligently when they're talking to different departments throughout the organization. I mean, I think the other key is, since GASB is expanding the lease definition, is really to reach out within our organization to make sure that we have identified all types of leases. So that would be talking to procurement, talking to your IT department, not only just finance department, and spreading out within the organization to make sure that we've identified all types of leases. The other thing to do is really look at your GL detail and your routine transactions. Are there any monthly invoices that are for the same amount? That might give it a clue to say, let's look in, what is this for? Is there an agreement for this? Going through, expenses as well to see, what is there that's kind of reoccurring, to make sure that you've identified the complete population, because this will be key later on when you think of your audit firm looking at it, to making sure that you did everything that you can to identify your complete lease population.
For sure. So
Sarah, that's a good point. I think, in the limited exposure I've had with the externals for the GASBs I have supported, I think the two main questions are completeness and accuracy. And so what you talk about is the completeness. So how are you going to answer that inevitable question from your external auditor? That is, how do you know you have everything? And unfortunately, they just won't take your word for it. They'll need to see some documented evidence. And so that's where these tests that Sarah brought up, as far as GL transactions, AP transactions, and then more importantly, those embedded leases, which are, those are an art form in themselves to try and find. Those are contracts that don't say typically lease or rent anywhere on them, but they do involve the use of a vendor asset. And under GASB 87, we are required to find all of those too. And so, as you can imagine, that does take a whole of government approach in trying to find those, and you will have to speak to procurement, IT, perhaps even some vendors, et cetera, to get an understanding of what the arrangements entail.
So then, Tim, like, I guess that's talking about how to identify our lease population initially, but how do you maintain your population? Like, how can entities make sure that a lease is not overlooked going forward?
Well, and that's the kicker, right? And, you know, this is not a one-time event. This is not a race to a finish line. This is actually a race to a starting line. And once you adopt GASB 87, you now have this sustained compliance requirement, which for most organizations is going to be directly tied to their processes. So when we think about GASB 87 and even the other lease standards, I personally think of them as finance transformation, because as a whole, the organization, the government unit, the university, whatever it may be, they're going to have to behave differently going forward. And that involves people outside of finance, which means, you know, as you go through this exercise, you should be thinking about how you're going to sustain compliance and begin to document and draft the roles, the responsibilities, the policies that will govern it. All of that needs to be thought out and communicated in advance of the standard so that everybody in your organization knows what their roles and responsibilities are when a lease changes, when a new lease occurs, when a potential embedded lease contract is signed. Those people in the organization know what to do with it, and they do that. Otherwise, you run the risk of readopting, and nobody wants that. And I think that's one of the lessons that we learned from the public companies that went through this, is that don't skimp on the foresight of how you're going to manage this over time. In fact, if you think of the public entities with the ASC 42 that were challenged, they were challenged because they failed to think ahead and they failed to prepare. And what they found is at the end of the first year, they went in to look at their database of leases and found out they were all stale because they didn't have those processes and controls in place. So in essence, they ended up having to rediscover and re-implement their standard at the end of the first year because they could not rely upon the database. So to me, that is all process and controls, roles, responsibilities, and policy. And if you're not addressing that as part of the challenge, then you are increasing the risk that over time your database will become stale and you will have to go through some type of rediscovery of that.
And I think another key takeaway that I got from that is maybe don't wait till the last minute.
Exactly, yeah.
And, you know,
change management is 95% of this, right? And so those that have dealt with change management knows that it's communicate and then communicate and then communicate again. And so the sooner you get that out, the better. Go ahead, George.
I also want to chime in here because, you know, we talked about GASB 87 being very similar to GASB 96. Let's also keep in mind that this is also going to be a challenge for GASB 96. You know, the whole completeness and identification, right? And unlike leases, right, where you can say, okay, you know what, we're a smaller entity and we have one or two leases that we can identify. You know, the SBITAs are a lot more complex, right? There's a lot more of them, right? So you can look at, for instance, a company like LeaseQuery, we have probably 2 or 3 leases out there, or you know, but yet if you look at the amount of subscription agreements that we have, you know, NetSuite, Salesforce, I mean, there's a multitude of them, and it's very difficult to identify those, right? So one of the things that LeaseQuery is doing here is we're considering creating a plugin, you know, that'll work kind of like LastPass, where we'll identify whenever you sign onto something new, and we'll just keep a record of it and say, okay, you know what, someone signed into Salesforce, so let's make sure that this is included as far as our total tech stack, right? And then evaluate it to make sure that we're accounting for it appropriately under SBITA and GASB 96.
That's a really cool idea.
Yeah, this is something that we tasked our engineering department and we're to do, and so that coming next year when it becomes effective, you know, it's an option that we can give our clients to use to make sure that they can use this tool to determine, okay, we do have completeness.
I think that's breaking news, right, George?
It is. The engineering department will be very happy with me.
You heard it first, folks.
Practitioners are happy too, George.
All right. So oh, go ahead.
I was just going to say, I think something that I really picked up on that Tim had mentioned too was, it's not a race to the finish line, it's a race to the starting line. And so we're talking now about how do you develop this new process to make sure that you're identifying all your leases, but something we haven't, aren't necessarily top of mind when you're going through implementation is that, like Tim said, you're going to be doing this accounting and complying with GASB87 and GASB96 for ever into the future. And so now you need to be thinking about these changes, contract, terminations, impairments, any of those kind of second day type activities that might come up. And so when you're developing this new process, you really want to make sure that anytime one of these contracts is getting touched by somebody in your organization, that accounting is on board and it's been communicated to them, and everybody's done all of the due diligence to make sure it's being accounted for properly going forward as well.
For sure.
And I'll add to that, Emily, real briefly. I know we talked about this in our pre-meet, but organizations do have a choice in how they want to actually deploy GASB87, and that is something that each organization is going to have to think about. And so what I mean by that is that LeaseQuery is going to be producing journal entries on a monthly basis. It's going to be producing assets and liabilities that can be reconciled on a monthly basis. But a lot of our government organizations choose not to record those entries because it's going to replace the lease expense that's in their operating budget and move it down to depreciation and amortization. And a lot of organizations haven't budgeted that way. And so they're choosing to, operate throughout the year the way that they have now. And then they leverage the platform to provide them a top-down entry that they can book at year end to replace the old accounting with the new accounting. But some organizations may not want to do it that way. And so really think about, your resources and your ability to commit and how that process will work, because you do have some choices. I personally do not recommend going to once a year, at least for the reconciliation piece of that. So if you wanted to, hold off on booking the entries until the end of the year, that's fine. I would still reconcile on a monthly basis the assets and liabilities to the best of my ability, just simply because I don't want to try and reconcile a year at one time. But those are some of the things that you have to consider. And if you're not thinking about it as you're going through the adoption process, you may not be choosing the right answer that's right for your organization. So.
That's a great call out. All right, so we've identified our leases. We have started to think about our processes going forward, but I think in the whole lease identification process, we also have one more step, right? Is this lease in scope? Because the GASB has identified some very specific criteria for leases that are considered in scope, and those are out. So Tim, can you talk about what's been scoped out of GASB87 and what that means for reporting?
Yeah, so I think, first and foremost, with any new GASB or FASB, there is the concept of materiality. And so one of the policy elections that organizations are going to have to define as part of the adoption is what will be their materiality threshold going forward. And with leases, that is a different animal than when you're thinking about, capitalizing assets. First and foremost, the risk of that you're solving for is different than your capitalization threshold. And so a capitalization threshold, your external auditors are worried that you're trying to expense something that should be amortized over time. When in fact, with the new GASB standard, we're not really changing the P&L at all, except for classification and moving things to depreciation that were in lease expense. And so materiality is more of a balance sheet consideration. And in reality, if you elect not to record something under GASB87, you are not recording the liability. And so your auditors are going to look at the lease materiality as a construct of that unrecorded liability. And so as an organization, you're going to have to go through a process prior to loading these into whatever accounting solution that you've got to determine, what is material for the organization, because you don't necessarily want to include everything, because administratively there is a cost to that. And so going through and identifying the appropriate materiality threshold for your organization, bouncing that off your external auditor, making sure they're aware of it. You will have to have substantive evidence to support that. And then, using that initial preliminary materiality to de-scope leases that may not be material, that may be administratively burdensome for the organization, so that you can truly get down to the leases that are generating the financial statement, a majority of the financial statement impact. And at that point, then you can kind of move forward after that. So in reality, that's one policy election that has to be done. The second one is the short-term lease exception.
Timothy, real quick though, before you pivot, have you seen? Because what we noticed when public companies were transitioning was to figure out that materiality threshold. They were piggybacking off their fixed asset policy. Is that what you're seeing GASB clients do?
No.
Are they piggybacking off that fixed asset threshold?
Yeah, I'm not seeing that, and that's partly because we don't recommend it, and secondarily because it will most likely give you too low a number. And again, the risks are different. So for fixed assets, they want you to capitalize it instead of expensing it in one period. It's not the same for leases, right? And so it really is driven by the size of the liability that you're putting on the books. So if you're putting $100 million on the books, a $2,000 lease is not material. It's never going to move that number materially. And so we've worked with some organizations that have been able to make the argument that all equipment leases are immaterial because the size of that liability is so large. It would take a really large equipment lease in order to move that number anything materially. And so that's what we're seeing, and that's what we recommend, because you're going to first get to a higher number, and that is going to exclude more leases. And so it's going to make it a little bit more administratively easier to administer, and it's also going to focus your efforts where it really needs to be, which is where the dollars are.
I also think, kind of adding on to that, you definitely have to work with your external auditor with this and be able to prove out the dollar amount and why it should be excluded. I also look at grouping like leases together. So if you have like a bunch of copier leases, putting those together, looking at not only individually, but on aggregate on all the leases. So if you say you want to scope out this lease, what the dollar amount is and what they all are together as well. I think also, looking at your, discount rate that you're doing, because this can really have a huge impact as far as, the liability that you're putting on the balance sheet. So making sure, again, I think that this is a collaborative process that you should be speaking with your auditor as soon as possible on every stage and step on the way, so that you can make sure and get buy-in on the way that you're going and your policies that you're going to be implementing around leases.
All right, so we are getting some questions from the audience, and I think this would be a good time to address some of these. In terms of,
well, I think Timothy wasn't, I interjected when Timothy was answering his question about, what's scoped out, right? I think the first thing he addressed was, so if you continue, please, Timothy.
So a couple of considerations. So like you mentioned, you did a good job at the beginning talking about the differentiation between GASB and FASB on the determination of term. But the theoretical response is that you have to assess the total potential contract period of the contract in determining the term, not what you expect to use it for. So if you have a 6-month contract with 2 6-month extensions, that is 18 months of term, regardless of whether or not you only plan on using it for 6 months. It would still qualify for GASB87. Then once you've done that analysis, then you can start looking at scoping, right? The materiality scoping. Embedded lease, we talked about that. GASB87 does require you to separate your embedded leases when it's reasonable to do so. So if you have contracts that have both service and asset components in it, a good example that I use for everybody is like the coffee pot in the break room. You're not paying for that coffee pot with the contract, you're paying for the coffee supplies. But in the cost of the coffee, there is an implicit cost of the machine. And under GASB87, that contract, theoretically, you're gonna have to separate between coffee expense and the cost of the machine, if you can estimate that. Now, that's a classic example of an immaterial or a de minimis contract that would never go on the balance sheet. I'm not proposing that, but it's a good classic example of why it does take some rigor in getting through this analysis on the front end. Because at the end of the day, when your population is every potential contract could have a lease in it, you've got to have a really sound methodology for how you're going through it.
Okay.
Yeah, and to that end, I think FASB actually lets you combine your lease and non-lease components.
If you
but
want
GASB
to,
does.
you have the election.
If you want to, correct. Yeah, correct. You're given the option to, right? Because they don't care. It gives you a larger liability anyway. It's in your best interest to separate it, but you can't elect to combine them. In GASB, though, you are required to separate those lease and non-lease components, right? It's a requirement, and you do not have. I mean, unless it's impossible for you to determine, what the standalone price is for the non-lease components. You're supposed to separate it and disclose it.
Exactly.
Okay, so moving on, we got a question. What happens to existing capital leases when we transition to GASB 87?
Nothing.
Exactly.
Nothing. It's no longer called a capital lease, it's a finance lease. Yeah, so, in theory, you've already capitalized that lease. And so you're going to carry it forward, that capitalization exercise. So if you capitalized as a capital lease 5 years ago, it's going to roll into the standard as a capital lease 5 years ago. There will not be any transition entry, assuming you accounted for this under legacy GAAP appropriately. And it's just going to change the name from capital to finance.
Right.
Make sure though, when you're developing your incremental borrowing rates, just keep in mind for capital leases, they are the implicit rates used at capitalization. So there will not be any incremental borrowing rates that you load for transition for GASB 87 for your capital leases. It will always be the rates that you capitalize them with initially.
Got it. Let's see, Sarah O'Sullivan, can you discuss how leases are handled in the fund financial statements?
Sure. So just thinking of fund accounting and, the GASB environment overall, this is what, GASB statement 34 spelled out, what financial statement requirements, how it's supposed to be presented. And in the government world, as we've all discussed before, is 3 primary fund types. You've got your government funds, your proprietary funds, and your fiduciary funds are the primary ones, and you've got sub-fund, categories underneath each of those. But what GASB prescribes and requires is for your government funds to be using more of I want to think about what's currently over the next year, what resources am I going to be used? And so you use what's called the modified accrual basis of accounting. And the really big thing that kind of sticks out for that one is you're not going to find these long-term assets on those and liabilities on those specific fund financials when you think about your capital leases you already have prior to even implementing 87, capital fixed assets, your long-term debt, those kind of things. But when you are operating within a proprietary or fiduciary fund, you're using a full accrual basis of accounting. And so you are going to look at those balance sheets for those specific funds and see fixed assets and capital leases and long-term debt. And so it's a different, it's a different set of terminology. It's a different kind of way that you're going to be recording things, which GL accounts is going to hit for each of those, a different way that you kind of look at it. Where it all kind of comes together is that when you are putting together your annual report, you're required to present government-wide financials on the full accrual basis. So while later in your report, you're going to have these individual government fund financials that are on modified accrual, you have to take those and convert them into full accrual for your government-wide so that everything's comparable. You're looking at everything, on the same level playing field. And so that requires a process. I know typically at year end, it's being done for when you're actually preparing your financial statements of what kind of conversion entries do I need to record to take what I recorded as modified accrual and now make it look like full accrual, like my proprietary and fiduciary funds look. And so really, you know, when you're thinking about GASB87 and adopting it, you're already doing this type of work. It's not like it's going to be anything different from what your overall process is for your capital leases currently, what you have to do to convert your fixed assets to get those on the books from modified to full accrual, as well as your bonds, your debt, your long-term liabilities. What's going to happen now is you're obviously bringing and making that lease population a lot larger, because all your operating leases previously operating are now all finance leases. And so now you're going to want to think through your process of, I've got to capture that entire population now, make sure that it's complete. And so you want to be able to know that you're, you know, separating them into the correct funds so that you're accounting for them properly and you get all your converting process correct when you're ready to put together your government-wide financials.
So before that polling question launched, I saw a lot of heads nodding on the panel. So does anybody have anything to add on the fund accounting side?
Yeah, there'd be one thing to add is, one thing we haven't really touched much on is on the lessor side. So just as a reminder, you will be recording any lessor type leases in the individual fund statement versus the leasee would be in the government wide. So, and these are one leases don't forget about whenever you're looking at completeness. Make sure and ask, are there any, you know, like parking lots or things that you're leasing out to organizations that would qualify as a lessor.
All right. So, Sarah, I guess we talked a little bit about the administrative side of things earlier in terms of, you know, thinking through your processes and whatnot, but can you think of anything else that our audience would want to consider in terms of, you know, transitioning to GASB 87 and how their processes would change? Like, what are some of the process changes your clients have encountered once they've transitioned? You know, is it the frequency with which they do things? Is it who does what? I mean, what have you seen?
Sure. So first off, whenever you're doing the implementation, you've got to come up with your policy. You know, once you've determined your completeness, what's your policy that you're going to disclose in your financial statement as far as we talked about your materiality, which ones are you capitalizing, what are you excluding, those types of things. You know, also make sure and look at your trial balance and your GL, determine what accounts that you need to add in related to the lease on both the lessor and the lessee side. Also, like you said, how frequently you would be reconciling this, whether it's monthly, quarterly, probably not annually, how new leases are going to be incorporated in here, what's the new process for that, looking at that incremental borrowing rate, making sure that you have determined what it should be, especially if it's not going to be explicit in these agreements, which I found that most of them are not. So, and I think it's going to be very common that depending on the type of lease, you're going to have different borrowing rates for different ones. So you're going to have a different borrowing rate for a 20-year lease versus a 5-year lease. So looking at that, making sure that you're able to support this. And I would recommend putting together just some type of, you know, implementation memo that really talks about each of these individual steps, how you addressed it, you know, how you determine completeness, who you talk to, making sure that you have a nice big inventory of all the leases that you've identified. Then obviously your evaluation of each lease as far as applicability to GASB 87, whether it's in scope or out of scope, and then looking at materiality, looking at, you know, again, what your policy is, and then how you determine your incremental borrowing rate. So it's a lot of things, but
Yeah,
definitely
sure.
need to think about all these things as you're moving forward on implementation.
And what I typically see is that a lot of organizations, you know, especially right after the adoption, they continue on doing the activities that they did to find the leases. So they kind of continue on for a period of months after the adoption, just to make sure that the changes and that people are doing things correctly. So the new processes, the new controls, the new policies, you're using that activity to confirm that people are doing those things. And if not, recommunicating, retraining, etc. The second thing that I would call out that we haven't talked much about is accuracy. And a lot of organizations are choosing to use, softwares like LeaseQuery to adopt and then to sustain compliance with the standard. And when you're thinking about accuracy, a lot of organizations think, oh, I just got to find my leases and just, enter them all into this software and then I'm good to go. Well, in reality, most of the softwares out there, they don't want you to enter your leases directly in the software. They want you to use upload templates. And the reason is that you can ingest many leases at once into these softwares, but also you have a spot in your plan where you can actually perform a secondary review of the data before it gets loaded to the system. This is pretty static for all IT implementations. It's not for leases, but you should be validating the certain critical data elements of the data that's going in your accounting software prior to loading it, and you should be documenting that because your auditors will want to confirm that somebody has done a secondary review of the data before it's been loaded to the system. So now you can validate the system and then ultimately use the output and be validated in using that. But that secondary accuracy check is critical in getting, satisfying that requirement from an external audit perspective.
No, for sure. I mean, garbage in is garbage out, right?
I'm sorry?
I said for sure. I mean, garbage in is garbage out.
Exactly. Yeah.
Okay, so a couple questions from our audience have come in, and we'd like to entertain these if you don't mind, panel. Someone wants to know, would heavy equipment, long-term rent to trade in or rent to own contracts fall under GASB 87?
I mean, I guess it depends on, are you going to be, is it a finance purchase? Are you going to be owning that asset at the end? So then that would be under your finance purchase arrangement. Or is it, do you have control over that asset over the term of it, whether or not you own it in or not? And if you're controlling that asset, through this rental agreement, then yes, it would be scoped in. Remember that GASB 87 really focuses on this control aspect.
Yeah, I think you brought up a good point, GASB 88, which is the finance purchase, right? So if you're going out to a bank and getting a loan to buy an asset, that's not a lease, that's a finance purchase, right? And so if that's the case, then it follows a different GASB than if you were to enter into a traditional lease agreement.
Yes, my understanding is if there's a purchase option at the end, then it's scoped out of 87. You use finance, it becomes a financing transaction.
Okay, so then in determining whether a lease is short-term, should we evaluate the maximum period for evaluation starting as of July 1st, 2021, our year of implementation? And so this is for existing leases as of the effective date. So I guess when you are transitioning a lease, when does that measurement of what is short-term begin?
I actually love this question because this was when we were in FASB, this was our VP of accounting and I completely disagreed on, right? And it's not completely spelled out, right? That's the challenge in FASB anyway. It's not completely spelled out. My take was, well, it's a transition date, right? So you would measure it. This was my interpretation once again, is that you would measure it from the date of transition, right? The remaining lease term. That was my interpretation of it. But hers was very different. She ended up winning. But once again, it was very vague, right? It didn't really specify. Did it mean the initial lease term or did it mean the current remaining lease term? Which I think that's the question you're asking. I don't know if anybody has any other thoughts there.
So I believe there is an implementation question that does address this. And so if you take it as of the date of implementation, so that would be the earliest date that you're presenting in your financial statements, whether, July 1st, 2021, if you're doing single year, or it'd be July 1st, 2020, if it's comparative, it would be the date as of the start of your implementation. So if for some reason it could have been a 5-year lease, but at the start of implementation, you only have a year left, it's considered short-term.
Great, thank you for that clarification.
You measured it on the appropriate contract term initially, which includes all of the potential option periods.
Got it. And with our 2 minutes left, there's one question. I thought this was interesting. How much thought needs to go into capitalizing implementation costs for GASB 96 contracts? Is it just direct costs, or would it include salary expense for individuals responsible for implementation, et cetera? So how granular can you get with including things for implementation costs?
That's again, the standard doesn't say anything about how to go about doing this. And in reality, I think I go back to my old accounting 101 days where, you apply the software capitalization rules and you say, okay, when does it become a viable product? At that point, I stop capitalizing and start expensing. And so the problem here is there really isn't going to be a significant amount of, quote, software development in this process, because these are SaaS-based products. It's mainly configuration. And the majority of your work is going to be done outside the platform, getting ready, right? Finding all those speedas, capturing them and pulling those all together. Is that considered a capitalization, a capitalizable cost from an IT implementation perspective? I think that might be a little aggressive. But I think when you get into the actual design and configuration of the platform, yes, there could be some that you could go to a granular level and capitalize using that just kind of back of a napkin. When does the software become viable? And that's kind of how I coach people. I think the answer is a little bit, unfortunately, it's a little vague in the standard, and it does allow for some interpretation.
So a sticking point that we've seen a lot in FASB implementation of ASC 842 is kind of starting to carry over now into GASB 87, and that is the incremental borrowing rate. When that rate is not explicitly stated in the lease, what are some methods your clients have used to determine that rate? Take it away.
So I think the best thing to do is really look at, what you can get loans out for at your rate. If you were to go out into the marketplace and get a 20-year loan, what would be your what would the bank give you? So looking at your recent debt issuances that you have, talk to the bank about short-term rates, because it's going to be different versus your long-term, your 20 to 30-year contracts versus your shorter-term contracts. And it's also going to be based on the type of asset or what type of contract it is as well. But those are things that I've seen that clients have gone out and done, and being able to support that.
I think, to add to that, if looking at existing debt, and if you have any of that, I think one thing to keep in mind is that, if you're looking at, say, a line of credit or some type of arrangement like that where you can draw upon it, typically those are over collateralized for the standard, and so the rates are artificially too low. So you have to do a little notching, and it does require a little bit of massaging by your internal treasury or someone to that effect to kind of to develop those incremental borrowing rates that are applicable for your organization. And I think the second thing to note is those should be developed as close to the adoption date as possible. So you wouldn't want to go out there now and determine your IBR rates to use for a July 21 implementation. You would have to go back and look at what your existing credit profile was as of around the end of June of 2021 and apply that in determining your incremental borrowing rates. So just a couple of things to look out for there. I think
the incremental borrowing rate has been one of the hardest areas of implementation for people across the board, right? Like it's not straightforward. It's not the same for everyone. And so I think that's just been a real sticking point for everyone going through implementation, from public companies, private companies, government entities. So if I'm a
private company, I'm going to elect the practical expedient to use the risk-free rate. That's the easiest way, but
but it took a while to get there.
It did.
Okay.
And also, I mean, because it's kind of a seesaw, right? The incremental, the risk-free interest rate it's a pretty low rate, which means your liability is going to, right? That's kind of the you know, it's give and take, right? That you're going to give. If you evaluate it yourself, you're going to probably get a rate that's higher than the risk-free rate, which reduces the liability that you have to capitalize. So that's also something to consider for private entities.
We have a few 96 questions, and I'm sorry, when I said we had 2 minutes left a minute ago, I was alerted to the fact that we actually had 10 minutes left, so it's not been a really long 2 minutes. So we have a few questions on GASB 96 specifically, and we could probably power through these in the time we have left. So does GASB 96 include maintenance and or support subscription agreements?
I don't believe that it qualifies the type of agreement. As long as it's subscription-based IT agreement, you know, that's greater than 12 months. And so again, what we're trying to do here is just capture the liability for those agreements that extend out over a year. And you know, again, that would be my thought process there. I don't know if anybody else has anything.
Yeah, I mean, with 96, what you're looking for are those contracts where you're in a subscription, you know, arrangement to use that other party's IT software, you know, their software or their database abilities, that kind of thing. It's not so much the maintenance, like some of the services that a third party might provide for you, but are you really using their product for your use during a set period of time that you're paying for.
And I know we spent some time on materiality before, and correct me if I'm wrong, but we were kind of addressing 87 specifically at that time. So there was just a question on clarifying, you know, a materiality threshold for GASB 96. Is that, I guess, is that a thing? Do you find organizations setting a materiality threshold for GASB 96 was the question?
You should be if you're not, because materiality is a construct of all GASB. So, you know, in an effort to ease the administrative burden, they give you that materiality clause. And so if you're not calculating it, you should be. It shouldn't be done until you understand or ascertain the entire population of speeders that you have. And at that point, you should be able to drive the same type of quantitative analysis to determine a materiality that you drove on the leasing side. It should be pretty similar. So I would definitely include an evaluation for that, just if anything, to ease some of the administrative burden.
Yep.
Okay, so if you have a 20-year lease with a 5-year extension available, how do you determine whether you should use the 5 years in your lease term? And it says a lot can happen in 20 years.
Well, I mean, GASB uses this reasonably certain type of language within the statement. So I think you just have to look at what is your intention, what do you think you're going to do at the time of implementation, look at historical practice. If you're in a building for 20 years and you've had this type of lease before, what did you end up doing? Did you end up extending the option? You know, if nothing else, you got to do it at the time that you know that you're implementing it, what you think you're going to do, and just make that determination and just make sure and be able to support whether you decided that you're going to exercise that option or not exercise the option when you're determining the term.
And I've had a couple of conversations with some external auditors about this topic, specific to some of my clients, and they do see this as a pretty high bar. So if you are going to leverage what they call this reasonably certain holding period, as opposed to the contract period in how you're accounting for this, you are going to have substantive evidence to substantiate that. So it can't be, I just felt like it, or, you know, in that context, you know, for a 20-year lease with a 5-year option, like you said, so much can change. I don't think that there's even physically possible to be reasonably certain today what you're going to do 20 years from now. And so to me, that's a high bar. I probably wouldn't include it, just simply because that's so far out in the future. For our, you know, ASC 842 clients, we typically, you know, say, look, after 5 years, you really don't have a clue what's going to happen from the business. And so, you know, including periods that extend that far out in the future, you know, you can if you want, and if your auditors sign off on it, that's great. But I think that it's a little bit too high a bar to meet at this point.
Yeah, we looked at historical data when we did it and said, you know, if we have 150, we could refer to them as lease events, so some sort of change in the lease. If we had 150 lease events each year, how many times was that exercising an option? And we found that, you know, only about 5% of the time were we actually exercising an option versus, you know, issuing an amendment to update the terms. And so 5% obviously is not reasonably certain, and we elected not to do that. So.
And that's a good point, Ellie. I think, you know, if you traditionally renegotiate leases or enter into an amendment of some support, then unless you're planning on taking the option as written in the contract, you wouldn't extend that, especially if you anticipate renegotiating the terms of that. So then in that example, if there's a renegotiation and you're not using the terms in the contract or the option, then you wouldn't record anything until you get the new contract.
Yeah. And I guess the final question that we'll have time to take today, do we have to apply GASB 87 at the fund accounting level or at the government-wide financial statement level?
So as we kind of stated earlier, you're going to do, if you're the leasee, you would do it at the government-wide level. But if you're doing any lessor, it would be at the fund level. So setting up that lessor, that lease receivable, and the lease payable at each individual fund. So which can, if you have a lot of those, you have to consider the different fund materialities if you have more than one fund that has these types of leases. Otherwise, the leasee, if you're a leasee leasing an asset, that would just be at the government-wide level, and then looking at the government-wide statement kind of materiality. So those are the kind of different nuances on that.
All right, well, if no one has anything to add, that is all we have time for today. Again, thank you to our audience for sending in such great questions. And I join our audience in thanking our panelists for sharing your invaluable experience with us today. I know I learned a lot in this discussion, so thank you so much. I appreciate you taking the time to speak with us, and back to you, Jason and Rachel.